Hey everybody, this is Elliot with Touchstone Financial Education. It's been quite a while since I've recorded an audio file only for my podcasts, but I've been thinking about some things the last couple of days as we round out 2024, which has been a great year. And I want to cover this topic before I write my quarterly newsletter and put out another video podcast, which should come out this weekend. But let's get some business out of the way first. Again, my name is Elliot. This is Touchstone Financial Education. You can check us out at touchstonefinancialeducation.com, and you can find us on Facebook, Instagram, and now X as well under the same name. Thank you to all my longtime listeners and followers. Here we go. I want to talk about the potential for an artificial intelligence bubble. The last few months of this year, the markets have really been going to the moon. Tech stocks in particular. It's been all year, but especially the last few months. We thought we might get a little bit of a pullback, but the market seemed to be climbing ever higher as everyone becomes interested in investing in some kind of way in artificial intelligence. Now, the bubble talk is coming from mostly large institutions that have an institutional memory of what happened back in 1999 and 2000. And that is tech stocks ran and then they crashed and took the whole market with it. Well, are we on the cusp of something like that again today? I don't believe we are, and we're going to run through what's going on now versus what was happening back in 1999. So let's start in the past. Let's go back to the turn of the century. At that time, I was a young stockbroker. I had been in the business for, about 2 or 3 years, and we were really enjoying this uptick in tech stocks. Now, because technology that we interact with today on a daily basis was so new, nobody was quite sure what was going to stick. So, as I was a young stockbroker in the San Francisco Bay Area at the time, there were companies like Earthlink and Pets.com and a host of others that obviously did not make it. Well, again, we weren't quite sure what was going to stick with this new thing called the internet. We weren't interacting with technology on a day-to-day basis back then like we are. So, for example, most people interacted with technology at work. So you had a laptop. The company you worked for had servers. There was software the company would have to buy. They'd have to buy security packages through McAfee or whatever, independent of the machines they were running. And every few years, companies would have to update their computers, their servers, and their software. So investing in technology, as volatile or as aggressive as it seemed, pretty much ran on clockwork based on companies upgrading all of their technology. And this was a small portion of overall investing. So tech stocks weren't as important then as they are today in terms of overall investing, but they were definitely an up and coming component or sector of what we consider today just normal investing, right? Tech investing. So nobody was quite sure. So all of these venture capital companies, all of these big institutions, and by big I mean Microsoft back then, Cisco, Hewlett Packard, SunSpark Stations, which doesn't exist anymore, a startup search engine company called Yahoo, and then another one came along called Ask Jeeves. These companies were basically in their infancy along with the internet. Again, not quite sure where this was going. How were we as a society, how are we as a globe going to interact with technology in our daily lives? We weren't sure. So, guess what? Everybody was throwing money at everything. We didn't know what was going to work. And there was a time when a lot of these upstarts, that's what we called them back then. Now, of course, they're startups. We didn't know which one was going to stick. So we hoped for the best. We didn't know how to analyze technology as it relates to its use, aside from business machines, meaning how is this going to work in our homes, in our daily lives? The cell phones we were using back then, Nokia, Nortel, right? Those little flip phones, or maybe the little flat ones you held in your hand. Nobody was really texting because it was difficult to text. So the technology had not been integrated into our daily lives the way it is today. So that when the bubble burst around those companies that did not fit into day to day use by the everyday person on the street. The companies that survived that bubble bursting, again, were organizations that catered to business. So it was a business to business proposition. Chips, companies like Intel and AMD and Oracle, Adobe, for example, all the big mature players that we talk about today, well, they were around back then, and those companies survived this incarnation, this creation of technology that is so pervasive in our lives today. All those little small companies, we didn't know what happened to them. They got integrated. A few of them survived, like, oh, the company for travel like Expedia, Priceline. Remember that? Captain Kirk from Star Trek made a huge investment in Priceline and made a boatload of money doing it too. Those companies survived, but for the most part, they did not. Now, let's jump ahead to today. We live in a world where we can't live without technology. We all have our phones in our hands, whether you're 95 or you are 11 years old. Technology has completely interwoven itself into our day to day life. And with that comes some institutional memory, or if you want to say investment memory, in that we know when we threw money at everything back then, maybe it was going to work, maybe it's not. Today, when we look at the investment in technology, in artificial intelligence in particular, it is very strategic. We know how technology is infused into our lives, and we know how it's going to be enhanced by artificial intelligence. So the investments being made today are much more strategic, they are much larger. There's a lot more transparency going on within the artificial intelligence sector and tech overall. So when we look at a potential bubble, would I say there's going to be one that's going to burst? No. Now, will there be pullbacks? Absolutely. Will there be bear markets? Absolutely. There's always adjustments and shifts in the marketplace. That's just the cycle of the market. But what's different now versus almost 30 years ago, 25 years ago, whatever, is that, again, it being more strategic, we have a better understanding of how we use technology. So going forward, the investment then will be much more laser focused, which is great for us investors because we can pick and choose much more wisely. Now, if you weren't investing back then, you're not that old, that's okay. You will benefit from watching institutions and how they are investing because they do have that memory from back in the day. So when you look at investing in artificial intelligence today, we're looking at the big players, the Googles, the Microsofts, the Amazons, the chip manufacturers like Nvidia, and today Broadcom made some announcements and they are going to the moon as well. So in fact, we're not looking at a bubble because it is speculative. We're looking at a growth, rapid growth in an industry that has targeted certain components of our lives, whether they be financial transactions like buying stuff on Amazon, or you know um, getting airline tickets, whatever the case may be. We know where the resources will be best spent. Again, doesn't mean we won't have a bear market, doesn't mean we won't have a pullback. It just means we are better positioned to deal with the volatility and the new push into artificial intelligence. And right now, as I record this, we are in a position where it is not standing still or stagnant or contracting. The industry is expanding by leaps and bounds so that the number of players in artificial intelligence today is expanding in a way that, as far as I'm concerned, is very smart. So you have the NVIDIA chips, you've got the Broadcom, you got the cybersecurity like CrowdStrike and Palantir, and now you have voice activated software that's provided by SoundHound. You've got an old school guy, Tom Siebel, who had Siebel Systems back in the day. He's got his company C3.ai, and they will turn around as well, but they're doing it strategically. They're mindful of their free cash flow or just cash sitting around that they can use to invest in their product or services. So, again, we are not near a bubble bursting as far as I'm concerned. This is just an expansion of a brand new sector in the market that is just starting to hit its stride, and you don't have to worry about making investments in this sector. If you're new, please watch, do your homework. If you've been around a while like myself, you know that you can see the expansion of this market. This market has legs. Artificial intelligence has legs. So we're going to go into 25 knowing that there is still a lot of great opportunity in this sector, in tech in general. And by the way, I'm going to be writing my quarterly and in this case, the end of the year report. So if you guys would like a copy of that, just go to touchstonefinancialeducation.com, reach out to us. We'll go ahead and send it to you. We won't bombard you with a bunch of stuff. I like to put out my quarterly newsletter for my clients and my students. Please reach out if you're interested in that. Also, I'm going to be recording some video podcasts here very soon for you beginning investors. And I'm going to start with what is a stock. So thanks for listening, guys. I just kind of wanted to get that off my chest. We're nowhere near a bubble in artificial intelligence. There will be pullbacks in the marketplace. The technology expanding at an ever faster pace, but that's good for us investors. So watch out. Thanks for listening. And if I don't hear from you or I don't record anything else between now and the holidays, everybody, please have a happy holiday. Take care.